What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for MicroStrategy Incorporated with the ticker symbol MSTR. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. This video is for entertainment purposes only. Please trade at your own risk. So this is the last day of the week before I can do MicroStrategy update, and I'll give you guys an update next week, probably Monday. So let's go ahead and close out the week and see how MicroStrategy performed. Well, it looks like since Monday, it just started trending down, and today was just a nice little bounce. But is this the end of the drop down, or are we going to still see lower prices? Well, let's go over the chart. It still looks like price is attempting to reach that gap fill attempt at 270. So this is one leg down right here, and this was the second leg down right about there. And the target for the bears have been that 277 level, or this gap fill attempt right over here, this empty spot between the two candles. So the bears are still trying to get there. You can see that price is still technically bearish. It's still in this below this trend line right here, and it's still below this trend line right about there. So it's still below these bearish trend lines with the target still in play, with the gap still empty, and also price kind of still below this breakout zone. So that's why price is probably pulling back. It's probably pulling back to retest this breakout level before it continues down lower. So today, I think it's just a pause in this downtrend. I think we're going to still see price continue to trend down lower. I don't think this is the bottom. I mean, it can be. No one knows the future, not even like a multi-billionaire. They don't know the future. We don't know for sure if it's going to reach that target of 270 or not, or if it'll even stop there. But as right now, that is the target as of right now, and it's still in play. Why? Because like I said before, price is still below the trend lines, this shallower one, and then the steeper one, the short-term trend line. Price is still below the breakout level, and we have that measure move target in play, which are pretty good, reliable targets. So it's still bearish, even though we see a nice big move up today. But again, what would make me change my mind is we start getting back above these levels. If we get back above the 360 level and we stay above it, and then we break this trend line right here, I think that's a very bullish sign, because that would tell me that the bears failed to reach their target, which means they're not as strong as they seem, and that means we can see a strong rally to the upside, stopping out the shorts who have the stop losses above these swing highs. So I know there's probably going to be a big short squeeze once we do see that reversal take place. So overall, it's still bearish, meaning we can still see for the downside, something like that in the meantime. But again, it's not guaranteed. So this is where people say, oh, technical analysis doesn't work. Well, who knows the future for sure? Like, is this supposed to reach the target 100% of the time? No, it's not. So you have to anticipate things to fail or succeed. So for example, if you were to take a long, then you would anticipate the pullback or the downtrend coming to an end. So let's say, the price is trending up and you want to go long. Well, you would wait for the pullback to show signs of weakness where it would terminate, so the trend would resume higher. So you're not trying to go short. I mean, you can have different strategies, but most people, they want to buy the trend. So let's say you are a trend trader, you would buy the pullback. So you would anticipate the pullback failing. Either it reaches its target or not, and then you would buy and you would ride up the trend. So for example, right here, the anticipation is it doesn't reach the target, right? You would anticipate it doesn't reach the target, which would be very bullish, because then you could come in and stop out the shorts and then ride it up higher. If it reaches the target, it's not, the end of the deal, end of the world. We can still rally higher, but it's better if the bears don't reach their target. It just shows more strength to the upside. So it would be bullish if we see a strong push up. Maybe we do see the strong push up. Maybe this is not a breakout, pullback, resumption of the downtrend. Maybe it's a breakout, failed breakout, resumption of the uptrend. And when we see an impulse, higher low, and that would probably be the confirmation for higher prices. So if we see, we can either continue rallying up like that. That would be one bullish case, or we do breakout. I would like to see a retest. That would be very bullish as well. And then a resumption. Something like that would be very good as well. But overall, since it's still below this level right here, right around that mid 360 level, it's still looking like price wants to trend down lower. So that's all I have on the daily chart. Basically, price is still bearish, but I want to go over the bullish case if that does occur, because we don't know what's going to happen for sure. But overall, I still think price is looking bearish, and it does want to continue to trend down lower until we see invalidation in the price levels. This is still bearish. So this is still a complex pullback. Sometimes you'll just see one simple leg down like that, and then the trend will resume like that. Or sometimes you'll see multiple legs, and then the trend can resume. So these were all simple pullbacks in this uptrend right over here. You can see that price made one single drop, and then it resumed higher. One single drop, resumed higher. See, these are all simple pullbacks. Maybe in a smaller time frame, it looks like complex, but regardless, just on this time frame, these are simple pullbacks, and now we are experiencing a complex pullback, which is multiple legs. So overall, this is still a pullback. I don't think this looks like the top of the trend. It doesn't show signs of a top of a trend. You'd see a couple signs. First would be an exhaustion, meaning like a blow off top type of trend. You could say a bubble, something like that. It just goes up exponentially and then it just crashes back down. That would be one way a trend can end. Another way is price is barely making new highs. It's struggling to push up, and then it can just fall down. But we're not seeing that. We're seeing new highs being made. We're seeing a not even large drops. So again, another thing that could change a trend direction is a strong counter trend momentum. That would be like something like this, but we haven't seen some sharp move yet. This is just taking its time. It's just a regular correction, and I still think we see higher prices. So again, the long-term trend is still looking pretty good for higher prices. This is just a pullback. I'm expecting the pullback to come to an end very soon, either whenever it does, like right now, or at lower prices, like the 270. Do I expect lower prices? Maybe sub 200s. We'll have to wait and see. If price cannot go up and it's still below this bearish trend line, then again, we have to play the trend lines. We have to play the momentum. So as right now, the momentum is still towards the downside unless invalidated, and as right now, it's not invalidated. It could be. I mean, this is a sign today that it could be, but we don't know for sure until we see a break above these levels, price holding it, and then a resumption. Because all price can do is push up today like it's doing right now, and then Monday comes around and then it just drops down, something like that. It's like a breakout, retest for resistance, and then a resumption of the downtrend. So we'll have to wait and see. Let's take a look at the weekly chart. And again, the EMA is catching up, so that's a good sign. Since this entire bull market, let me go and put a vertical line where the bull market started, right over here. Basically, in late December of 2022, January of 2023 was that bull market. And you can see that every time price pulled back, it came right to that 21 bar EMA. So it pulled back over here, came to the EMA, over here, over here, over here, over here, over here. This one went slightly below, immediately reversed up higher. So every pullback basically came near the EMA. And we're coming near that EMA, which is currently trading at that lower price level of about 270. Is it guaranteed to get there? No, it's not. We don't have to do it all the time, but it does add confluence to that target for price to drop down lower still. But overall, still looking very strong. I mean, it's consolidating at the highs of the trend, still looking very good, still staying outside of this prior all-time high level. So again, this level does come into play once again back here in 2000. How can a level like that come back into play? Well, because if this was a high back in the past, it can be a high in the future. So that's why it does matter to look at this price level because it was a historic top, and it's going to be a level where traders focus on because it could be a top now. But it's not looking like a top now because we're still seeing strength to the upside. So it's still looking pretty good. Overall, again, like I said before, macro trend is up. We could just take a look at the monthly chart, see if we can find anything else on there. Not really. Monthly chart still looks very strong. We could probably draw some sort of channel. See, that looks pretty good. Still in an uptrend channel. We hit the highs of the channel. That's where we're finding some sort of resistance. You see that we hit the high here, sold off. Well, this was the new high, and we sold off a little bit. So again, it's just in a correction right now. But overall, still looking pretty good. Looking for higher price targets for MicroStrategy. Like as before, let's go back to the weekly, the $1,500 target, and then possibly the $4,000 target. I know those sound insane, and sometimes it is, but a lot of times the price action is what you have to follow. So that's one large leg right there. This is the second leg up, and that's targeting right around that $4,000 level. So there might be a stock split in there. So I would just calculate it based on the market cap. So overall, still looking pretty good for higher prices. This just looks normal to me. Unless we see a strong push through this EMA on the weekly chart, that would be a strong counter trend momentum, and that would show a change in market direction. So right now, this looks pretty good. You can see that price is mostly bouncing off that EMA, barely going below it. So we're still above it. We can barely go below it and resume higher. You don't want to see something like this where we see boom, like a huge drop right through that EMA, a strong counter trend momentum. This would not be a good sign. It wouldn't be over because we could still reverse higher quickly like a V bottom, but this would not be a good sign. And as right now, have we seen that? No. So I'm going with the big money, the smart money, which is still higher. So overall, just to simplify, is just a complex pullback in a macro uptrend, which I'm expecting higher prices for, and this correction should be coming to an end very shortly. That's all I have for MicroStrategy this week, and most likely I'll give you guys an update next week, Monday. This is Vee Trades, and thank you for your time.